Hello, Arkansas, and welcome to this week's edition of Arkansas Money Talk, brought to you by the team of Retire Path Wealth. I'm your host, Kristen Oakley, and joining me in the studio, we have Dale Colclaser. He is the president of wealth management at Retire Path Wealth, and co-founder Mark Smalling. We've got a great show for you today. The title of today's show is Investing Fear During an Election Year. If you have any fear, uncertainty, doubt on what you should be doing with your money during this critical year, you're not going to want to miss today's show. Dale, Mark, I'm excited to be back with you, and I think it's important that we let our viewers know we actually did this subject on a show a couple months ago. Talk about why we're talking about it again.
Because the fear hasn't gone away. In fact, it's increased. So that's, there's a lot going on, and people are concerned. Everybody that walks in our door. I mean, it's a topic of conversation. Interesting.
So share some of the concerns that you're hearing directly from folks when they're coming in and meeting with you for the first time.
Well, you know, there's always the belief if X happens with a particular candidate, then this obviously has to come along with it. And so many times it's the assumption that if a particular candidate wins, the market's going to do this, or this is going to happen to that. Right. And the reality of it is that policy will drive all these things eventually to some type of a outcome. And it's not something that's necessarily going to happen in a snap overnight. Not that the market doesn't react that way, but not typically to politics.
Yeah, well, we've got lots of stats and data to back it up, but I'm curious, when folks came in as a result of seeing us discuss this subject matter on a previous show, what did they say about this show that caused them to go, you know what, I really need to come in and meet with Dale and Mark?
Well, again, I think it's just simply uncertainty. And it's not a discussion that they're having somewhere else. They're having it around the kitchen table, but they're not hearing it from their broker or their assumed advisor. Again, well, I'll come back, and as we say all the time, one of our purposes is to make sure you have the right advisor for the appropriate stage in your life. Right. Is that so many times I have someone who only wants to talk to me about investments. They only want to talk about, how we did last year, if it was a good year, and if it was a negative year, let's skip that conversation. As simply opposed to talking about, here's all the things that are going to happen in the future, and how are we going to plan for that?
Yeah, for sure.
Well, it's being proactive, and Dale always kind of lays out, because somebody said the other day, you know, the market's crazy. You must be getting all kinds of phone calls from your clients, and the reality is we're not, because of how we plan and how we lay out the possibilities. If you lay out the possibilities, this is what's going to happen if this happens, and people feel comfortable with that. You don't hear that. They're prepared for changes that may be coming.
They don't have to subject themselves to that same fear and uncertainty because they have a solid plan in place, and they know that adjustments will be made accordingly by you and the Retire Path Wealth team should X, Y, Z, or ABC happen.
That's right.
Yeah,
because we've planned for income, because we're now in that stage of life where we're no longer probably accumulating as much in assets. We're more worried about sustaining them and taking them for distribution, and we believe that that's two completely different ways of investing possible.
Exactly. Well, you know, if you're at home and you are feeling this fear and uncertainty, we want you to know that you're not alone, but there is hope for you. We're going to be sharing some of those stats with you. And I think it's important just to help our viewers understand this is personally my third presidential election that I will have been going through since being in this industry. You all have been through, I think we figured out before the show, 9 presidential elections, right? No. You don't look it. You don't look it. But the point is, we've been through this. We have seen, and there are certain patterns and trends. And of course, unfortunately, one of the patterns and trends that we're trying to help, mitigate here is that fear and uncertainty that a lot of folks face. So I have some stats here. This is according to a recent survey by the Nationwide Retirement Institute. It said that almost half of investors believe that this 2024 presidential election will have a bigger impact on their portfolios than market performance. That's a common conception that folks have. 32% of investors believe the economy will plunge into a recession within 12 months if the political party they least align with gains power. And then whether you're Republican, Democrat, Independent on the study, it said that they believe that the outcome of the presidential election will have a direct and immediate lasting impact on the performance of the stock market. Wow. But we have seen what happens with these election cycles, right?
Well, my reality, I believe, Kristen, and I don't know what these numbers are, but what you mentioned, I bet if you went back to the 2020, the 2016, the 2012, you'd have gotten very, very similar numbers.
Oh, yes. Yep.
And the reality of it is, folks, is we're all still here. As long as the sun continues to come up tomorrow, we got to find a way to generate income so that we can pay all those bills, so that we can have that retirement that we want to enjoy.
Yep, for sure. Well, and to that point, it's also important to understand that when you see political pundits making points on TV, they're making political points. They're not giving you individualized, personalized financial advice. That's important for folks to remember in the wake of all this noise, right?
That's right.
It is. I mean, people get those two confused sometimes. They overlap, and actually, I think some of the pundits get them confused sometimes. I think they're overstretching their knowledge about different topics.
For sure. Well, there's a study here about, it's called Political Climate Optimism and Investment Decisions. This was done by the Social Science Research Network. That's quite a mouthful to say. But this is really interesting because the study found that when Democrats are in power, they tend to be more optimistic, therefore they invest more, right? Yep. When a Republican is in power, then Republican investors tend to invest more because they're more optimistic. So it was showing that people make more, but it's not based on their political affiliation. What's it actually based on?
It's based on their optimism.
And how much money they're putting in, right?
Exactly right.
Right.
And so the reality of it is maybe we should be optimistic all the time, because we're looking for ourselves. And again, if we have a solid plan in place to where we know that we have a predictable source of income that's always going to continue to come in to no matter whether the White House is, blue or red.
Right.
Because I'm not worried about the fluctuation in the market on a daily basis, to continue to generate a return on those assets is my only option. Then I have a sense to have a much more optimistic outlook,
right?
Because I believe my future is secure.
Yes.
We've told it for years, and I know, Kristen, it's no secret that we tell people all the time. We work with a lot of employer groups, and the reality of it is we tell them, more financially sound employees are more productive employees. More financially sound people are more happy and more optimistic people about what their future can look like as well.
Right. Well, and we're going to share some data as we go on throughout the show that really does support what we're talking about here. One of the things I want to point out, we've talked on the show before that you all have two very different personalities, which is a blessing because it makes you work really well together as a team. Oh. And I know that, Dale, you come out of the gate, you've got the facts, you've got this is what you need to be doing, here's why. Mark, you bring a lot of empathy and compassion to the table. When folks are coming in and they are having this worry and this concern, how does the conversation go?
Well, I mean, it starts usually, and Dale usually says he's the nice one, is what he tells people. So you'll meet with Mark first. He's the nice one. So we invite you to come in. We really try to get to know you and your situation, and try to figure out what's important to you and your family and your retirement. And we'd love to have you come in so we can actually help you navigate all of these uncertain times.
Right, and to your point, having that solid plan in place no matter what's going to happen in and out of Washington.
Well, in perfect follow-up, it was just this last week we had a lady come in and we come out to meet, and I introduced myself and she goes, "So you're the mean one?" And I said, well, we're going to find out. And so it was really interesting because she was still a number of years away from retirement, and we just kind of walked through the situation, talked about some things that she could do, and so I then asked her and I said, so what is your conclusion? Was I the mean one? She goes, no, I appreciate someone literally being honest enough to point out what I need to do.
Yep.
And to be honest with me, not paint a overtly rosy picture, but then show me a way to accomplish what I'm looking to do, and then allow me to decide which way I want to take that.
Absolutely.
So if you're one of those out there today and you don't know what your future may look like, you are concerned about what effects this election or any other outcome is going to have on your particular situation, come in, sit down with us. Let us go through your situation. Let's devise a written income plan specifically for you so that you can have the confidence in knowing what your future has the ability to look like.
Wonderful. Dale, Mark, thank you so much. I love working with both of you, and it's not about being mean or nice. It's about being able to meet each person where they are and present the information, present the facts so that you can help mitigate that, eliminate really that worry and that fear that we know so many folks are feeling, but you don't have to feel this. We know that a lot of this might be new to you. The good news is it's not new to Dale and Mark and the team of Retire Path Wealth, and they would love to help and serve you. So for no cost, no charge, no obligation, this is simply an invitation to have a conversation to see how they can help you. We invite you to pick up the phone and call 866-724-3893 and start your own journey to discovering your Retire Path. Also, if you'd like, you can take out your smartphone. If you open up that camera app, just point, click, and scan the QR code that you see there down in the bottom right-hand corner of your screen. That will take you over to a landing page, ask you a few short, simple questions, and then a member of the team from Retire Path Wealth will reach out to connect with you to schedule your complimentary visit that way as well. Don't go anywhere. When we come back, we're going to be discussing how you can prevent political uncertainty from derailing your investment portfolio right after this.
I didn't start out in Medicare. Medicare is something that came along later in my career. I started with Northwestern Mutual as a college intern back in the early 90s, and I was with Northwestern Mutual as an advisor for about 12 years, and then I actually went out on my own after that. And it was actually when I joined another firm that needed somebody to get into Medicare because Medicare was going through a lot of changes. That's when I got into the Medicare business. And I became an intern at Northwestern Mutual through a college, job fair day. And that there was the advisor for Northwestern Mutual out of Little Rock. The district manager came over with his recruiting specialist, and that's how I ended up as an investment advisor at Northwestern Mutual. So that's how I got into the game. The thing that I enjoy most about my career is being able to help people on a daily basis. I mean, to literally see people come in the office that are scared and there's a lot of trepidation about what do I do and where do I go from here, and having them leave with that weight lifted off of their shoulders. Making sure that everyone that comes in to our office leaves feeling like they've received something of value from us.
Welcome back to Arkansas Money Talk, where today we are discussing investing fear during an election year. I'm your host, Kristen Oakley, here with both Dale Colclaser and Mark Smalley from Retire Path Wealth, based right here in Arkansas. And the reality is we know a lot of folks are experiencing fear and uncertainty based on what may or may not happen coming with the presidential election, what the stock market may or may not do. And the reality is the tragedy of all this is that it can sometimes cause people to make emotionally driven decisions, bad financial decisions. Right. For example, I've heard people even say, well, depending on who wins, so-and-so wins, I'm just going to pull all my money out of the stock market. That is not a sound financial strategy or a solid plan in place.
No, it's not. I mean, we've seen people that even pulled their money out in the last election cycle and it's still sitting in cash.
Wow.
I mean, so you see that, it happens every election cycle.
Well, that's why we really need to look at some of this data that kind of proves the point that we're talking about of how important it is to have a solid plan in place no matter who's in power in the White House. So this comes from a study that was put together by Invesco prior to the 2020 presidential election. And we were sharing earlier how we all have been through multiple presidential elections. I remember the data that came out that was very similar for the 2016 election. So very fascinating. So this was called 10 Truths No Matter Who Wins. One of the truths was that the markets have performed well under both parties. So let's talk about that. I know we have a chart that we're going to show that really illustrates this really well.
Yeah, I mean, the reality of it is the market does what it's going to do during different times. And so you'll see here that this shows that the stock market returns during presidential terms and economic growth from 1957 all the way through 2020. And as it shows that the markets have performed well under both parties. The S&P 500 index delivered an average of a return of approximately 11% over the last 75 years through both Democratic and Republican administrations. The U.S. economy also expanded around 3% over that period of time. The stock market's return was negative for a presidential administration only when the country is in financial crisis, such that of 2008. Or experiencing stagflation, spiral like it did in 1973. The reality is that neither party can lay claim to superior economic or financial market performance.
And I think that's the point that this chart really shows so well, right? Is that,
yes.
yeah, I mean, the markets have done well under both parties for sure. Well, one of the other 10 truths that was highlighted in the study was that the markets don't care if you don't like who's president. This is really fascinating. Let's take a look at this next chart.
Okay. Yes, so basically in this chart, it shows that the growth of $10,000 of the Dow Jones Industrial Average since 1896, so reaching back to the beginning of history of that index. It says one line there on the bottom, the two on the bottom, shows that if your $10,000 would have grown if you only invested when there was a Republican president.
Right, so that red line on the bottom is showing if you'd only been invested when there was a Republican in the White House.
That is correct. And then the blue line, of course, shows if you'd only been invested while there was a Democrat while being president.
And that's what your 10,000 would have grown to.
That is right. Not much.
Right.
But look at the growth of $10,000 over that same time frame if you had simply been invested the entire time, regardless to who was president. So can you imagine the growth that people have missed out if they pull their money in or out of the stock market based on their political views?
That's a huge difference between those lines on that chart. I mean, that just shows the importance of staying invested the entire time.
Right.
Right.
Yeah, because if you're jumping in and jumping out, obviously, you know, that can be so damaging to your overall investment returns. And yet, despite the data showing this to be the case, again, we know when we hear people say, oh, I'm planning to pull my money out. You mentioned that people did that in 2020 and they still haven't gotten back in.
Right, right. Well, I mean, people trying to time the market, and in most cases, it's harmful to them, and it's one of those things that's very difficult to do.
Yeah.
Well, and the reality is that almost no matter why you decide, when you get to that point to say, gosh, I just can't stomach anymore, the bottom's probably pretty close to being there. And that's that point of capitulation where it begins to move back the other way. And now all of a sudden I don't have the ability to get back in because I'm concerned, it's going to bite me again.
Yeah. Well, and speaking of timing the market and why it doesn't work, we have another chart we want to show you here at home. And so this is why it can be so detrimental when you're trying to time the market. So talk about what we're looking at here.
Yeah, because the huge outcome differences here. It says we're going to take this look at this chart. We're going to illustrate the importance of being invested all of the time. Okay, it shows what would have happened if you'd invested $10,000 in the S&P 500 from January of 2003 through December of 2022. So a great outcomes time frame. Over on the far right, it shows what you would have earned if you'd only missed the 60 best days in the market during that 19 years. So it would have only earned $4,205. Now take a look at the second column. It's going to show what if you just missed the 10 best performing days in the market over that same time frame.
Right, that second from the left there.
That's right. I mean, the number is substantially greater. And then take a look at the very first column. It says if you'd remained invested the entire time of that 19-year period, your $10,000 would have grown to over $64,000. During that period of time. So really, it's not timing the market, it's time in the market.
Yes.
Now, that doesn't mean, Kristen, that if we do have concerns, maybe we shouldn't have a real conversation of how our assets are allocated. And maybe that's really the conversation, is because if I have a good solid income plan in place and I know what I need to achieve to make that plan work, I now know then what parameters I can live within with my investment returns.
Right.
It's so amazing to me that we have people that'll come in that have no clue what actually they need to be achieving because they've been so suckered in, for lack of a better word, into this whole performance answer because they sit in the break room at work and somebody says, I made X, and if my X isn't as big as theirs, then I feel slighted.
Yep.
Or when they talk about loss, or I remember the time my account value was here and then that value came back down. Folks, I mean, the reality is we need to be having real conversations about what it is you personally need to achieve from your investment structure to accomplish the plan you have in place for yourself.
Right.
Well, and that's what we see. I mean, people don't know really what their risk parameters or tolerance.
No.
I mean, they
And their
they
risk
think
capacity, right?
Exactly.
Yeah.
And so that's one thing that we try to do when we sit down with people in our offices. We try to get to learn about them, put together a plan for them based on what their risk tolerances are, and because if you're invested in things that you can't stomach when things go up and down, we need to be looking at ways to mitigate some of that risk and keep us within certain parameters.
Well, to the point Mark makes, for the pretty much the last 17 to 18 years, we've been in the scenario where the market's just gone up.
Right.
There's been some hiccups, obviously, as we go through.
Well, the market only does one of two things, right? It goes up, it goes down. We just don't know when it's going to happen.
Never sits still.
Yeah.
And the reality is there's been multiple administrations through that time frame. But they have lost some of their understanding for risk. Now, some of us found it again in 2020, which was unfortunate because that was a very short-lived, man-made adjustment. Some of us found it in 2022 when almost all asset classes were bad.
Right.
But then again, we begin to forget about it because things just seem to always want to go up. And then we have days like we've had so far this year where we may have 1,000-point adjustment in the Dow in a day. And people now all of a sudden begin to look back and go, my gosh, what is this?
Yep.
Where the reality is, if I'm proportioned properly, maybe those are opportunities that I have the ability to get back into a position if I've done things correctly.
Correct. A couple things I want to point out about the charts that we just showed too with the timing. And to your point, I love that you said that. It's not about timing the market, it's about time in the market. And studies show, and I think that chart, one of the things that's missing from it is it was showing if you had missed some of the best days, right? Well, often the best days are right on the heels of the worst days.
That's right.
And so if you pull out when everything is down, now you've taken a loss, your money's out, you miss the upswing. That's why it's so dangerous to try to play this game of jumping in and jumping back out again.
Right. Well, or the other side, because some numbers we didn't talk about here, and one of the things that really turned my investment philosophy was in 2004, reading an article that talked about if you missed the worst days of the market, you actually performed greater than what your underperformance was for missing the worst days.
Wow.
And so the reality is if I have a good, solid, holistic income plan in place and I know what I need to achieve, as opposed to just simply shooting for the moon every day, trying to hit home runs, if I have that solid plan in place, it can help me weather these ups and downs so that they almost just move along without interruption.
Well, if someone's watching and maybe this is newer information to them, maybe they haven't heard this data before or understand that, as we shared, I mean, literally the markets don't care who's in the White House. What would you say to someone who's watching today who is feeling fearful and concerned?
Well, we're simply going to reach out and say, please give us a call. Reach out, call the number, scan the QR code, whatever it is. Let's make sure that you have a good, solid plan in place. Let's make sure you have the appropriate advisor for this stage in your life, that you understand all of the pieces, how they work together. Guys, moving into retirement is about cash flow. It's about having income in place. It is not about being able to necessarily brag about what my investment returns are every year. It's about being able to brag that I'm never going to run out of money. And the reality is, if you don't know that you have that in place, give us a ring. Let's go through our complimentary process. Let's see the value that RetirePath can bring to your particular situation and see if we can find a way to work together moving forward.
Wonderful. Dale, Mark, thank you so much. To our viewers at home, that number to call to claim your complimentary plan is there on the bottom of your screen, 866-724-3893. Or again, you're welcome to take your smartphone and scan that QR code, and that will get you connected as well. When we come back, I'm going to be asking Dale and Mark, I'm going to put them on the spot and ask them the one question that's at the top of everyone's mind. Stay with us to find out what it is.
We got to know where we're headed to. So I always call it a target that we're shooting for. The critical pieces of that is, at what age do you want to start looking at retirement becoming a reality? And then simply, what do we need for income to continue to live the standard of living that we're either accustomed to or that we want to have at that point? It looks like having a written income plan in place so that you know over the next 20 to 30 to 35, however long that time frame is that you have a sense of security of knowing that you're not going to run out of money. The idea is I like to be as tax efficient as possible, but we're going to be very proactive and futuristic, proactive tax planning. And then once we put that written income plan in place and they can look down to the end and there's still positive numbers left at the end of that calculation, that's the most rewarding part of it, because you're going to retire once.
Welcome back to Arkansas Money Talk, where today we're talking about investing fear during an election year. And I'm here with Dale and Mark from Retire Path Wealth, and we've shared lots of data and important statistics. You know, I'm reminded of what one of my mentors always said to me, which is that money is neither red nor blue, it's green, right?
Yep.
That's why we can't afford to allow our political affiliations to affect having a solid and sound financial strategy in place. So no matter what happens in Washington, you know that you're going to be okay and have that income to last you in retirement.
Because money's nothing but a tool.
Right.
We got to make sure that tool is properly wielded and that it's actually doing the job that it should be doing, which
Right.
at this stage, really what we're talking about of our stage in life is being put in a position to where it has the ability to provide us the amount of income that we need to meet our monthly income needs, whatever goals that we've set for retirement, and that we have a plan in place for it to never run out.
Right. Well, I promised our viewers I was going to put you on the spot and ask the one question that I'm sure is on the top of everyone's minds out there, which is, how should I be investing my money right now during an election year?
Well, that's the most beautiful question, because you're going to get the answer individually that I'm going to give to everybody else. I have no idea. Because we don't know what your situation is.
Right.
We don't know what you need yet. So if you can begin to put together some ideas, begin to put together the assets that you have in place and reach out to us, we love to sit down and actually build a written income plan for you as well, so that we can answer that question. Because until we know what someone needs, we have no idea how they should actually be investing their dollars, how that system should be structured.
Right. And it's really an individualized, personalized thing.
It absolutely is. You know, every person that walks through the door, I mean, because you have people come in every day and going, I've got this $100,000. What do I need to do with it? And, you know, and
it depends.
It
depends.
Right.
That's absolutely right.
And, you know, because, I mean, or we have people at some of our educational workshops who go, you know, what do we need to do with this? What do we need? And we always say, we have no idea.
Right. Until you come in and look at your situation, right? Yeah.
Right. So, you know, we'd really like for you to take the opportunity that we're offering you today to come in for your complimentary assessment of your situation, help you put together a plan for you, so no matter what happens going forward, no matter what happens with the politics and the elections, that you're going to be okay. And you know, we truly believe that each individual situation is unique and deserves a unique plan, and we'd love to help you put that together.
Wonderful. And for folks who are newer to you, I'll just remind them where your office is located.
Yeah, so we're right here in Little Rock on Rodney Parham Road. A lot of people know we're in between. We're in the office building in between Bedford Camera and Party City. Most people know where those places are.
Right.
We're pretty easy to find. Parking's easy, and we're on the first floor.
Well, one thing I always want to point out, too, is if they can't get to our office, we have the ability to do virtual appointments as well. We have a super system for utilizing that. So from anywhere inside the state or even outside, happy to help.
Wonderful. Yep. Dale, Mark, thank you so much. I'm excited for more folks to connect with you who might be feeling this fear and concern and worry, and be able to meet with you so that they can have that removed from their lives. Again, that number to call to receive your complimentary plan, 866-724-3893. We love you, Arkansas. Thanks for being here. We look forward to being back with you next time here on Arkansas Money Talk.